Hello and welcome to another video for the ALR version 3. This video is to show you just another example of it in action, and I took a trade earlier on and I thought I'd just play it back for you and describe what happened to give you an idea of how it works. This example is to show you that we can set the settings in the ALR to either break even if your trade reverses on your initial trade, or to take profit no matter what direction your trade ends up going. So for example, if you were to take a trade up and unfortunately the trade was to reverse against you, then you just let the ALR do its job, and it will take profit when it goes the opposite direction. And of course, if it was to reverse again or again or again, it will still take profit no matter what direction it ends up going. So as you can see on the left hand side over here, we have a distance of 4 pips. Now that's rather small, but I'm doing that intentionally so as to force the hedge trades to come in. And normally you'd set the distance, which is the zone size, to be larger so that you don't get unnecessary hedge trades placed caused by spikes in the market, such as these big wicks here. As you can see here, these can reach up and trigger the hedge trades if they were to breach the edges of the zone. So you don't want to obviously do that. It's not going to cause a problem, but it just means that it'll open unnecessary hedge trades, which will obviously have to use up margin to cover those trades. You don't really want to do that unnecessarily. So set the zone to a sensible size that is usually determined by looking back over the previous candles, and you can see the zigzag line here, and you just simply measure the distance between the top and the bottom to get an idea of what the market price is doing and where it's ranging between, and then set your zone size to just out with that, so that when the price does break out, then you're ready to take the profit, because the ALR will kick in at that point and take the profit for you. So in this case, as I said, I've set them small, set the zone size small intentionally so that we can force the hedge trades to take effect, and so I can show you how it would work in any scenario. The take profit is set for 8 pips, which is double the zone size, the distance here. By doing that, that means that no matter what the price does, no matter what direction it goes, it will always take the profit either way. If you had the take profit set for 4 pips, i.e. the same as the distance, then if your initial trade was to reverse on you, then it would break even, which is fine. It means you won't ever lose, but it just means that you might have to wait for a trade to come in and you just break even. I prefer to take profit either way, depending of whether the trade goes up or down. Of course, by doing that, you have to be able to cover the margin for that. But normally, the hedge trades never kick in any more than 2 or 3 or 4 times. Certainly, especially if you have the zone size set for a sensible size. We haven't set it for a sensible size in this case because 4 is very small. Normally during the day, when it's busy, 12, 15, 20 pips of a range from top here to bottom here would be normal. During the Asian session, when it's quiet, it's a lot smaller, around about 4, 5 or 6 pips. So just be aware of that. Just set your zone size to a sensible size, and when it breaks out of that zone, you will be taking profit in any direction, no matter what way the price goes, because you will have double the take profit compared to the zone size. So what I do is, I'll just let this video unfold here. What I do is I jump between the M5, such as this here, to get a general idea of what is going on in the market. Now we can see here that we've got 1, 2, 3, 4, 5 green candles. We've got the blue dotted line going up. We've got the green traffic lights here. We've got the sun star here, saying that there's a pivot point here. It's turning around at this point. The Heikin-Ashi candles are all green, saying the trend is going up here. And we've got the trend on the M15 going up. We've got the M30, which is orange, but is probably turning around. And all of this tells me that the trend is going up. What I would then do is I would jump back to the M1 just to get the entry point. What I mean by that is by going back here, we can see that the green candles of the Heikin-Ashi are green. So I place a buy trade here. I would normally place a buy trade here, but I'm not going to place a buy trade. I'm going to place a sell trade here, which is against what I would normally do, but I'm doing that intentionally to show you how the hedge trade works and how this ALR works. Now you can see here I've just measured between the green line and the red line, and you can see the 8 points there. That's just the stop loss that is placed, sorry, the take profit that is placed for the 8 pips that you see here. Now that would take effect if I had if the price was to come down and reach my take profit level with my sell trade. Now however, I don't expect this to reverse. I don't expect this trade to come down, because for this purpose of this video I'm trying to do the opposite so that I can show you the ALR doing its work. So we're intentionally taking an opposing trade which goes against all the rules, but I shall show you that even by doing that you will still come out in profit. So let's just let this unravel and see what happens. Now as I said, I expect this trade to go up, even though I placed a sell trade, but for the purposes of this video, to try and encourage the ALR to do its work. So we let it go, and I shall show you what happens. I'll jump forward because otherwise it'll be far too boring just to sit here and watch it. So I jump forward, let's see, and as I said, it is going up as I predicted, although as I repeat, I took a sell trade for the purpose of this video. So based on my strategy, shall you call it, using the template, which is the same template that you will get with the software when you install the software. This is a version that we've created which came from the Codenames 8 template. We've cut it down and tweaked it accordingly and just left on it the indicators required to determine the trend, because that is all you need. You just need to know or be able to see what is the trend that's going on, and by jumping between the hour, the M30, the M15, the M5, and you can get the general idea of the trend just by looking at the no lag MA line here, which is the blue bit here, and the purple line here, blue going up, purple meaning down. Of course, it is a combination of several moving averages merged together to show you what the price is doing. You also have the Heikin-Ashi candles, which, as you know, show you the trend because they use a special formula which uses the average of the previous candles to determine what the trend is, and so they're not like your normal candles, and hence you can see the series of red, series of green, and that helps you again determine what the trend is. Plus you've got the blue dotted line going on here, which is showing you the trend direction, and you've got the sun star icons here as well, showing you the tops and bottoms. Plus of course you've also got the what we call the in and out indicator, which is basically a bottom and a ceiling here and a bottom here. So you again know that the price will not go below this at this current moment in time. And so with all these indicators in place, you can easily see what the trend is doing. Just using those basic indicators, I say basic, they're not actually basic, the combination of lots of clever stuff, but they look basic on the screen, but just by using them, you can get 60-70% accuracy just by using them. And so you'll be right 70% of the time just by using those indicators, and you can place a trade just based on those indicators. The ALR, its purpose is to be a fail-safe. It's there to protect you if your initial trade goes wrong. So 70% of the time we will be right just by using these indicators as I've described. But if for some reason the market turns against you, and of course it will and it can and it will, because that's just the markets and that's what will happen. They don't trend in the same direction forever. They will turn around at some point, but that doesn't matter to us because the ALR will be there to protect us. And if we have the settings like I've described, the 4 distance and the 8 profit, although they are too low, I'd normally be a lot bigger than that. But as long as you have a ratio of 2 to 1, i.e. 2 for take profit and 1 for the distance, as long as you keep that ratio, then no matter what direction the price ends up going, you will still come out in profit. So if it goes in your initial direction, you'll take profit. If it reverses, then the ALR will manage it and you'll still come out in profit. So we don't really mind what direction it goes. So we're letting this one go, and it would, I expect, come out, continue on as an up trade, and we would sit there and wait for it to reach the 8 pips take profit on an up trade. But as I repeat, I've done a sell here because I want to show you what happens if the trade was to go against us. So kind of forcing it to take effect so I can show you it working. I guess that also shows you that even if you're rubbish at picking a direction, you still can't lose, because it's still going to come in profit no matter what direction you take. So I guess you could, in theory, well, actually in practice, you could just come to your desk and place a trade on with your broker in any direction via MetaTrader using the software here, and not really care what direction you're taking your trade, because you know it doesn't matter what direction it ends up going, you're still going to take profit. I know it all sounds a bit too good to be true, but it does actually work. The catch, if you can call it a catch, because there's always a catch if something sounds too good to be true, let's be honest. The catch is that if it reverses on you, then it has to use up some of your margin to cover the hedge trades. The more hedge trades you have open, then the more margin it has to use. But if you use sensible sized lot sizes, I've used a very small one here, 0.5, just for the purposes of this demo. As you can see, it's only using $50 of margin just with this small lot size. I always have about $1,000 in the account, and that allows me to have several hedge trades open without the margin exceeding what I have available. So I'm always going to be able to cover a significant number of hedge trades. I've never seen it go any more than 6 hedge trades, especially if you have a sensible zone size setting. Then it's never going to exceed that, so you're never going to have to use all your margin up or be concerned about that. So that's the only thing to bear in mind, or the catch, as people would say. It's not really a catch, it's just something to consider. Other than that, there's nothing else. You can take your trade up or down and not really care what direction you've taken it, because it will come out in profit if you have a 2 to 1 ratio, i.e. 2 as in the take profit and 1 as in the distance. Keep your pip sizes sensible, and you'll be okay. I've only got 8 take profit and 4 distance, as I said, which is rather small, but I'm doing it for the purpose of this video so I can show you what happens. Okay, let's move this forward, see what happens. Alright, I'll just go back a bit to show you that happening. It's moving up as I predicted it would, because that's what the indicators were telling me. And it's reached a point where it's decided to take a buy because the price is moving up. Now I took a sell trade, as you see here, intentionally opposing what I would normally have taken for the purpose of the video, and of course the price has gone up as I expected it to do, and the ALR has noticed this too, of course, and taken a buy trade on my behalf. It's because it knows better that the price is going up, and it has placed a buy trade for me. So we then just have to wait for this to reach its 8 pips take profit, and we'll be in the money. So even if it was to reverse on us again, that wouldn't matter, because the ALR would place a sell trade once it comes out of the zone and comes down again. It would place a sell trade with the correct margin to cover the previous 2 trades, and also enough of a trade to take profit going the opposite direction. So it doesn't matter how many times it does this and goes up and down and reverses, the ALR will always manage it to take profit for us. So just move forward here, see what happens. Now, of course, as I said, it's still going up just as I predicted it would, but as I repeat, just for the purpose of this video, we took the opposite direction just to prove a point. So it's still going up as I predicted it would. If we had taken a buy trade when I took my sell trade, then we'd be getting close to taking profit pretty soon, because it has gone in the right direction. And I would have taken an up trade normally, because as I described it earlier on at the start, I use this template here to tell me what direction the market is moving based on the indicators that you see on this template, which you get with the software. Very easy to read. Basically follow the blue line on the M5, and that should be enough. And you'll see the traffic lights down here. If they're all green, then it means that the M1, the M5, the M15, the M30, the H1 are all trending up, because that's what the traffic lights tell you. They're very accurate. They are telling you the current trend on those particular time frames. So with those, and the Heikin-Ashi candles being green, and the blue line, dotted line being green, and the bottom green arrows here, and no opposing red arrows up here, it means that the price is going up. So I would have taken an up trade and I would be winning, but I took it down in order to force the ALR to do some work. Of course, as price trends, what we call it breathes in and breathes out. So we have the green going up here, then it takes a breath, then it does the green again, then it takes a breath, and it comes in, and it does that all the way along. See, it's taking a breath here just now, so we get the cross here indicating that there's a temporary stop going on, and it's temporarily coming down, hence the reason for the red arrows appearing here. Now we don't take any notice of these until there's 5 of the red arrows and they have stayed put. That means that it's hit a point where it's actually going to start coming down again. This hasn't happened yet. This is what I call breathing in and breathing out. It's just taking a breath just now before it continues on its way up. That's what I would expect to happen. And 70% of the time, as I said, that is what would happen, and you'd win your trade. If however it was to reverse, then what you see is a line of red arrows like these ones here appearing across here, and they stay put, and the price would start coming down, and then the sun star would appear. This is sun star here. It would appear up here, and this blue dotted line would change and start coming down here. Then you know that the trend has changed and everything's coming down, and you take down trades from that point onwards. All very simple, and that's what the template tells you. Follow those rules, and you'll be 70% correct all the time, taking your initial trades. But as I said, if it all goes wrong and turns against you, then we don't care, because the ALR will get us out of that trade that we took without us having to hit stop losses and give up money to the broker for hitting stop losses and taking any losses. We just let the ALR hedge us out in profit. So let's just move this forward, get to the end here. Now this looks like we've got a significant kind of stop here, but it's a what I would do at this point is I jump to the M5 to see how it looks, and you'll find, in fact, the fact that this blue line here is flashing on means that it's still, and this this candle here with the very small body on it, this means that it's not actually going to come down. It's just temporary. It's going to start going up again. That's what I'd read into that. This is just this breathing in thing that I talked to you about. You've got your breathing in and breathing out, breathing in and breathing out. That's what's happening right now, and so I would wait until all these wicks either come down here or break through the line of red arrows here. Normally there's 5 or 6 of them. I would observe any more than that, then I get a bit more serious. For now, I'm not too concerned. I'd let this go, but even then I'm not going to be concerned, because whether it comes down or not, I don't care, because the ALR is going to look after me anyway. So I wouldn't even be watching the charts. I wouldn't be caring or panicking at this point. Now normally, if you didn't have the ALR in place, you'd start to be panicking at this point and thinking about closing out of the trade and hitting your and taking your stop loss or giving up your stop loss, because it looks like quite a significant down is happening here, and so most people would close their trade, get out, and not have reached their target and be giving up money to the brokers. And that's the sort of thing that I did not like, because you were taking 2 steps forward and 1 step back every single trade you were taking, or every other trade you're taking, and at the end of the week you weren't actually making as much profit as you thought you were. Whereas with the ALR, you're only going to make profit, because any losses are going to be turned in to either break even or take profit. And as I repeat, if you just want to break even and use less margin, then just use the take profit size and distance size to be the same. If you want to take profit on either direction, no matter what the market does, then just make the take profit double what the distance is. So when you take trades with the ALR, you're calm. You don't panic. You don't worry about what the market's doing, where the price is going to go. You just let it go, because you know you're going to be safe no matter what it does. And if you don't have the ALR in place, then you're like the majority of traders. You are panicking and trying to make a decision: should I get in? Sorry, should I stay in or should I get out? And you panic and make decisions, then only to find that when you close the trade, it starts going back on its original course. And if you just stayed in, you would be in profit. A bit like what's happening now. In fact, it's starting to go back up again. So if I closed out 3 or 4 candles back, I'd be out of that trade. But I don't have to do that now with ALR, because I don't have to panic or worry about making a decision of whether to get in, stay in or get out. I just stay in and let the ALR take the profit for me either way. So it makes trading a lot less stressful, and you don't have to worry about anything happening in the markets or any of these manipulations that appear to be going on, because let's be honest, they do go on. There's market makers out there all reaching for your stop losses and take profit levels to try and trick you into to closing sooner rather than later. We know it goes on, but with the ALR we don't have to worry about that, because we set take profit and it will take the profit, and it will go on and on until it takes the profit. We don't have to make a decision. And just as there you go, just as I was talking about it, it has continued up. So that was a fake reversal. I would have probably normally, if I didn't have the ALR in place, closed at that point thinking this is turning around. There was lots of red arrows across the top here. Normally at 5 or 6 I start thinking about that the market's reversing and I need to get out, and I would have closed out. I would have given up my spread. I would have taken a bit of a hit on the retrace there and not made actually much profit at all, and then I'd have to start my trade all over again. But not anymore, not with the ALR. You don't have to worry about that, because we're still in the game and it's continuing up, and it's going to reach our profit at some point hopefully. And as I said at the very start, I would have taken an up trade initially, but if I was doing it manually, I would have probably stopped out and panicked. But not anymore, not with the ALR. You just let that manage it, and it takes control, and it will always come out in profit, and therefore you do not have to worry. It makes trading so much calmer and easier and far less stressful. There's no stress involved, in fact, you just let it go. So let me move this forward to see where it goes. Again, another temporary reversal, but that's just the way the markets move. Again, at this point, I probably would have panicked and stopped out, closed out, and not taking much profit, given up my spread, and have to look and wait and look for the next trade to take and do it all over again. That's just too stressful. Doing that every day, it just burns you out. Whereas having the ALR in place, just letting it do it for you, is far less stressful, far less stressful. And you don't have to worry at all, just let it do its job. So move this forward. Now this looks like a significant reversal here because the line's going horizontal. We've hit a big ceiling here. I'm thinking, oh geez, this is going to turn around on me now. It's going to start coming down. I would definitely have stopped out at this point. So there's only about 4 pips, there's 5 pips there of a move. Now I've wasted about an hour of my life sitting here, if I was doing it manually, watching this to gain nothing, because if I closed out and I would have given up my spread, I would have actually made a loss, because I would give up my spread, take something and not made any profit whatsoever worth speaking of. That's not the way to trade. That just does not get you anywhere. You're never going to make good amounts of money by doing that. And there you go, just as I said that, it's starting to burst through this ceiling here. Now normally we would have closed out at this point, because those candles, those row of candles, the fact the blue line's coming down and the ceiling's hit here, any trader would have thought that's going to stop. That's not going to continue up. That's going to reverse. But with the ALR in place, it sits in. It takes all that stress away. And even if it did reverse, it would take another trade for you in the other direction, still gaining profit for you and covering the previous ones. We don't have to worry about all that, because trying to do that manually, on top of watching the trades and trying to make a decision, should I close, should I not close, it's all far too stressful, too many numbers to work out, and trying to do that for every single trade of the day just to make a few pounds, and having to do that several times of the day, it's just not on. You can't trade like that, you'll burn yourself out. So let the ALR, that's what computers are for. Tell them what to do and they'll do it, and they don't worry, they don't concern themselves and have the stress like we do. So just let the software do the job. So let's move this on. And again, it's just ranging from the side for the past 15 minutes. It's just been ranging from the side, from sides going nowhere, but ranging within about a pip of a range. A real boring market, doing nothing. But we're still in this trade. We're still in the game here, whereas normally 2 or 3 occasions back we would have closed out and we'd be earning nothing, and actually in a loss. And the broker would be making profit, or would have made profit from our spread. So the red lines have now disappeared because the price is trying to break through. And there it goes. Price is broken through. We would not have been in this trade if we had not been using the ALR. The ALR has enabled us to stay in this trade. We're still in the game. We're going to be in profit, and we just let it go all the way until it reaches its take profit. And so that's how we make money from this, because it takes away all the stress and the strain and worry and decision making process that we'd normally have to do if we were trading manually. On paper, if you were to describe what the ALR does, you'd think, oh, I can do that manually, but you can't. In reality, you can't, because there's too many other considerations, too many other things going on that you have to make a decision on, such as I described a couple of times back there, where the market seems to be reversing. Should I close? Should I not close? Should I take an opposing trade? Should I not take an opposing trade? You know, yeah, that's the sort of thing you'd be concerning yourself with, and trying to do that several times a day. Let's be honest, it's never going to happen, and you're never going to make money that way. But letting software do it for you is really easy. So this is still moving up since we took our first trade, just like I said it would, although, as I repeat, I took a sell trade in order to force the ALR to kick into action when it realised that it wasn't a sell trade, it was an actual buy trade. It recognised that, it took a buy trade for us, and that's why we're in profit. So now we just have to let that reach its 8 pips profit. It will take the profit. We have that in the bank, whereas on 2 or 3 occasions past we would have closed out and we would not have taken the profit, and we would be looking for another trade to take and trying to do it all over again. Oh, in fact, I'll just rewind that. I have to jump back. It's reaching up now. It's going to reach its 8 pip profit. There it is. Reaches 8 pip profit. Has taken the profit, put it in the bank, and as you can see, our profit is in our balance here compared to our 999 that we had at the start of the trade. Now I know those aren't big numbers, but this is just a demonstration for you. Of course you could use much bigger lot sizes, and it all depends on what sort of fund you have as well. You may want to use bigger lot sizes. Even with the small fund that I had, you can use bigger lot sizes. I just chose to use a small one for that moment in time, but that's irrelevant. The whole point of this video is to show you the process and how the ALR helps you trade. No stress whatsoever. Means with the ALR in place, you don't have to panic or worry about making a decision whether to close a trade or get out and try and take some profit, or just cut your losses. How many times does that happen when you trade? Pretty much all the time, and that's far too stressful, and it's also a very inefficient way of making profit, because you're giving up so much of your spread and taking losses too many times based on panicking because what the market is doing, and then you find that you've made that an incorrect decision and the market actually continues on in the initial direction that you had taken the trade initially, only to find that you've closed out now and you can't take any more profit anymore. You've got to start all over again and give up more of your spread, whereas if you just stayed in your trade, you could be in profit now. And that's what the ALR does. It keeps you in the trade. It takes the profit at the best and most optimal and quickest time, and if indeed it did reverse, it doesn't matter, it will still take profit going the opposite direction. So I hope I have helped clarify some points and maybe some questions that you've had in your mind on this. I'm trying to think if there's anything else I need to say, but I think in summary, as I said at the start, 70% of the time you'll get the prediction right, just based on the template, or just by using the template that you get with the software, i.e. what you see here, just by using the blue dotted lines and the green the Heikin-Ashi candles and the traffic lights and the sun stars. With these, and the baseline here and the ceiling, you'll be able to clearly see, by jumping from time frame to time frame, you'll easily be able to see what direction the market is going. Then you can take your trade up or down. You don't have to set any stop losses. You don't set any stop losses on the trade you take. You just place an up or a down. All the settings in the ALR will control when you take profit and when it makes a decision to take an opposing trade, i.e. based on the zone size. So I think that's covered it. Install the ALR. Take a trade with confidence. No need to panic any longer whether your trade is going to go up or down, because no matter what direction it goes, you'll still take profit either way, and let it take all the worry and make all of the decisions. You just take the trade, go away, come back to see a profit in your bank account, and then you do it all over again several times a day every day. That's pretty much the ALR in summary. Hope that's helped. Thanks again for watching, and I'll put some more videos up, and if you want any specific videos for anything in particular, just let me know and I'll make them for you. Thanks again for watching.